What's going on, guys? Bexio back, and today we got a brand new video going into this recession that we're seemingly already deep into, about halfway into at this point, as we got a negative GDP print a while ago for the last quarter, and that is obviously on paper a recession would be two negative GDP prints back to back those quarters, and you'd be officially in a recession. So if we get another one, we would be in a recession, and that would mean we'd probably be about halfway through it at that point. But a lot of the questions would be, what do you do during a recession? How do you invest money? It seems like there is nothing safe at this point, with all the indexes. Like the S&P is down 18% from the top, the Nasdaq's down 28% from the top, and the Russell 2K down 28% as well. So it's a pretty tough environment to be investing right now, and would be pretty nerve-wracking to be putting money anywhere at this point, with things like the Russell and the Nasdaq officially in bear market territory, being down more than 20%, and the S&P getting very close to that. Especially if you look at the total value lost during these types of drops, they dwarf things like the dot-com bubble and the financial crisis, which is crazy to think about because there doesn't seem to be that massive event where we had something in 2022 that just caused everything to flip and just start collapsing out of nowhere, besides interest rate hikes and inflation. But that doesn't seem like comparable to the financial crisis and the dot-com bubble. So the amount of value lost, over $7 trillion, is a ridiculous figure to think about. But in the same point, these indexes, after seeing times or periods of downfall where they fall a lot, the growth afterwards is massive. The bull runs after are massive runs up. We saw that in 2020. We saw that after the financial crisis and the bull run decade that took place after that. So it's just stuff that happens short term most of the time with recessions and downturns, but then the bull markets after more than make up for what happened and just go crazy. So that's what you don't want to miss, is a bull run like that. And investing during times like a recession is pretty important to just buy, hold, and ignore the noise, or continue investing and ignore the noise and not let anyone fear you into anything. Because if you are saying right now the market's down bad and you're talking to yourself and you're saying, like, should I sell? The answer is you should have sold a month ago. At this point, you should be buying, because at this point, things are so beaten down. Great assets could have fallen to prices that they shouldn't be at, only out of extreme fear in the overall market. So in investing during times like this, a very easy way to do it without having to put in so much work or time into studying markets or studying companies would to be just buy index funds. Just buy something like VTI, VOO, SPY, just the S&P 500. Overall markets like VTI or VOO is the S&P as well. So these different types of index funds you can invest into, and they're diversified into the index itself. So it's going to be less volatile, it's going to be less stressful, and you're going to be able to kind of ride the market going into, whatever it does, but less volatile effects like things like Netflix or Walmart or Target or something like that, where those stocks had like massive volatility events, and that could have made you lose tons of money that you might not have been prepared to be able to stomach to lose. And with index funds, you actually beat the majority of traders and the majority of professional hedge fund managers and traders and all that titles by just having the index fund, because the majority of them don't beat the market. So you can easily not do any work or just invest passively, and you won't have to worry about any of this. And an index fund, the S&P, typically returns around 7 to 10% per year, which is a pretty good return. Nothing to shy away from, and pretty good for not needing to do a lot of research or due diligence, or have to put a lot of time into the market, and just kind of be able to put money in passively and be consistent, and it grows to massive amounts. So if you look at something like index funds, just for $500 a month investing over a long period of time, say 30 years, you could have, at 7%, it would be $584,000 after the 30-year period. Or if the market is compounding at 10%, then you could have over $1 million after the 30-year period, which is obviously insane to even think about, that you could become a millionaire on $500 a month. I think a lot of people don't realize that that's pretty easily possible with passively investing into an index fund. But if the index fund isn't enough for you and you want to get a little bit more risky and branch out on that risk curve, you could go to individual stocks and blue chips in particular. So if you want to get more risky, but not necessarily completely speculative and insane risk where you could lose everything, you could go into the blue chip stocks, which have pretty good return rates, something like Apple or Microsoft. Those are going to have great return rates. If you look at something like Apple over the last 10 years, it has actually compounded at a rate of about 25%, which is amazing. Obviously, the overall market, 7 to 10%. Apple going at 25%, massively just better. So if you take that same type of principle, that same example of $500 per month invested into Apple stock for that 10-year period, compounding at 25%, then you actually get $221,000 after 10 years, which is really good. That'd be something like $60,000 that you would have invested in principal, and then it would be worth $221,000 in Apple stock. So it's just massive amounts of gains and interest and money that you're able to get by just getting a little bit more risky, but really not really, because Apple's not going bankrupt. Apple's not going to disappear in 10 years, 20 years, 50 years. It's going to be here. They're a behemoth. They make lots of money. They basically print money. So there's nothing really to worry about there. But branching out just a little bit into individual stocks, you can get a pretty good return there. And things like Microsoft is about the same too. It's 24% that they've been compounding the last 10 years. So that same $500 would have turned into $206,000. So if index funds are just a little bit too boring for you, or you want to do a little bit more work or due diligence or get involved in individual companies, blue chips are an easy way to go without going too far down into kind of, mid caps or small caps that could be massively volatile and have the chance of going under, in which you could lose everything, which is a lot more risk. If you're willing to do all of that and put in a ton of work, you could do it that way. The returns are obviously could be massive, but the risk is also massive. So it kind of goes both ways. A little bit safer route is the blue chips, which is still 25% compounded annually, which is a ridiculous compound. So though that would be, if you're branching out a little bit further, the blue chips are a way to go. But we do have to realize that the past results don't guarantee anything in the future. Just because Apple for the past decade compounded at 25% doesn't mean this next decade it's also going to compound at 25%. It is a massive company, like $2.5 trillion. So maybe the compound goes down a bit, but if it just beats the market, if it goes more than 10%, the top end of the market, then it's returned very well and beat the market, which is something the vast majority of people who try to beat the market can't even say. And if you want to branch out just a little bit further, if the stock market isn't enough for you, you want a little bit more risk, a little bit more reward for your money, you're willing to take that risk, Bitcoin could be the one for you, which could have massive upside potential. Obviously, the most asymmetric bet here with way more upside than it has downside. And that's just something that you can't really get in the stock market without going to extreme small cap companies. But Bitcoin is obviously pretty established by now. It hit $1 trillion market cap. It got up there. We're having a little bit of a down in Bitcoin price right now, but still hovering around the $30,000 mark after everything that went on is pretty good. I think we could get Bitcoin to $1 million by 2030, which is a pretty lofty kind of goal or price prediction, but I think it's completely possible. A lot of people say it's insane. A lot of people don't believe it could happen, but it's been said before about Bitcoin. It'll be said again about Bitcoin. I do think it's possible for it to reach these ridiculous numbers of $1 million per coin by 2030. For everything accelerating, 2 more halvings listed in. So we'll see, how that goes. I think it's completely possible and not completely out of the realm of possibility. And if it was to do that, that would put Bitcoin at a compound rate of about 43% annually, which is obviously more than the market of 7 to 10% and more than even the blue chip stocks of 25%. So in that same example of $500 per month, if it was going into Bitcoin compounding at 43%, you would get $545,000 at the end of a 10-year period, which is obviously the most out of any of these. It's the most upside out of any of these, but it does technically have more risk than any of them as well. So if you want to go out on the risk curve to Bitcoin, then I don't think Bitcoin's super risky, compared to even mid cap or small cap stocks, and especially compared to 99% of everything in crypto. I don't think it's that risky or carries that much risk. I think it's an insane asymmetric bet that could pay off massively if it continues to run its been on, and it's historically been on for the last decade. So we'll see if that happens. But if we compare all three of these, the index fund, the blue chip stocks, and Bitcoin to each other in a 10-year period, then we would get an index fund would return you about $100,000 after the 10-year period of $500 invested per month. Blue chip stocks would return you $221,000 after the 10-year period, and Bitcoin would return you $545,000 after a 10-year period. All of these massively good if you want to be more passive and not have to deal with volatility. Index funds are perfect if you're willing to take a little bit more risk but not go crazy. Blue chip stocks could be great. And if you're willing to take a little bit even more risk than that, going into Bitcoin and seeing the asymmetric bet go on there, then obviously you could have a lot more reward there. And maybe you want the best of all worlds, put a little bit in index funds, a little bit in blue chips, a little bit in Bitcoin, and just stay a little diversified that way. You could do that too. So obviously during a time like a recession, money gets kind of hard. The most important thing is to be able to have funds to continue investing, because normally these prices are so beaten down. That's when wealthy people, that's when the rich, that's when all these guys who can afford it scoop up cheap assets, and then into the next few years, those assets skyrocket in value and they make a lot of money. So if you can copy that game, you don't even need that much money, $500 a month. If you could find that money, you could put it into whichever assets you want to, and you might get out on the other side in a much better situation and making a pretty good amount of money and holding assets through times like this. That's basically the whole thing that you really want to do in a tough recession time, tough market time, is hold great assets and continue buying great assets that are beaten down and have fallen to prices that are pretty oversold because they shouldn't be there. The market is just an extreme fear. These are the three types of investment you can make right now during a recessionary time or tough times in the market. Ride it out, ignore the noise, and get out on the other side and just see where everything is at that point. But that's going to do it for this video, guys. As always, don't forget to smash the like button and subscribe. We're on the road to 1,000 subscribers. I'll see you guys in my next video.